What's going on, everybody? Good evening. This is Trading G's with G. This is my third episode of my free game series. This one is titled Watch Sell Rule. All my new subscribers, thanks for pulling up. All my return subscribers, welcome back. It's Inauguration Day. Donald Trump is currently the new president of the United States. All love, no hate. Can't hate somebody I don't know. Happy MLK Day. Shout out to my brothers and sisters out there. Long live Martin Luther King. I'm going to make a disclaimer before I do this video. Listen to the Dreadhead Trader with a grain of black salt. Do your own due diligence. Be your own designated driver. You cannot believe 100% of what I say, but just know I have your best interests, and I'll always keep it 100 with y'all. All right, so the watch sell rule. This is something that I've been doing the last couple of years investing. I'm just going to get down to the definition for those of y'all that have never heard of it. So a transaction in where an investor sells a losing security and purchases a similar one 30 days before or after the sale to try and reduce the overall tax liability. This was enacted by the IRS to prevent investors from using capital losses to their advantage at tax time. So, the reason why this was made was so that a lot of people who do not do their research on taxes, they're probably thinking every time they lose a stock or a contract or some type of option or ETF deficit, they think they can use that loss and use it as a capital loss. If they buy something if they buy that same stock before 30 days before or 30 days after the sale date, they're ineligible. They have committed the watch sell rule violation. So I'm going to show you guys a clear example in just a second of how you can avoid violating this watch sell rule. So this applies to stocks, contracts, options, and other types of securities in trading. So other types of securities will be mutual funds or index funds or even a Roth IRA. It does not apply to a 401k because that type of security already has its specific tax breaks. A Roth IRA is a little more independent. You have more versatility. This does not apply to any cryptocurrencies. No Bitcoin, no Ethereum, no XRP. Because right now, cryptocurrency is still a digital asset. It's not a security. It's not backed up by FDIC or SIPC. So, and it's also not eligible for any commodities. So gold, silver, platinum, any type of oils, Brent oil, crude oil, cotton, cocoa, you get the picture. So this only applies to specific securities. And another thing that you guys should know, a lot of people do what's called tax loss harvesting. I will explain that in episode 4 of my free game series of trading, because this goes hand in hand. They're two different things, but very similar. So with that being said, I'm going to show you Barnes & Noble. So I would say if you're new to trading or investing, download TradingView. Why? Because you can have different folders. And this one, for this episode, I went into my watch sell rules stocks folder. You have to keep track of multiple accounts. So if you have a Roth IRA, if you have another brokerage like Webull, I have Robinhood, as y'all know, Moo, Acorns, etc. This will not work if you are selling certain stocks or ETFs and you're trying to not buy 30 days after. You might have bought before another exchange. You have to really keep track of everything because this watch sell violation will happen. So keep track of everything. For me, I just simply use Robinhood and Webull. I do most work on Robinhood. So let's get into Barnes & Noble. This is my latest contract options that I lost money on. I lost a total $409. This was past Friday. January 17th, right here. So let me get out of this DraftKings one. Let me show you more of the Barnes & Noble history that I have. So I'm going to go over the 3 set of options that I lost money on. Here we go. Let's go to history real quick. All right, January 17th, right here. So last year on May 23rd, I spent $280 on 7 contracts. Long story short, a reverse split happened last June 2024, so I was not able to take this as a tax loss up until now, since the contract expired on the 17th. So I lost $280 there, and these were $1 calls. Over here, I bought these 50-cent calls. On June 7th, I bought 10 of them for $100. Those are gone. And my last set of calls was $1.50 calls that expired on the 17th. I bought 20 contracts at $110 approximately. So I lost $490. Now, when I scroll down, you clearly see there's no buy. I have not bought any Barnes & Noble stocks or contracts / options or ETFs. So I'm eligible so far halfway through. Let's go to the calendar over here. So today is the 17th. So 30 days prior would be, let's count by 7, multiples of 7. So 7, 14, scroll down here to December. 21, 28, 29, 30. So if I've bought any type of Barnes & Noble stuff from the 18th of December up until the sale date, which was the 17th, I will not be able to use this future tax loss. So I had to wait 30 days after also the 17th in order for me to use this. So I will not violate the wash sale rule. So 30 days after the 17th, multiples of 7. 7, 14, skip over to February, 21, 28, 29, 30. So obviously the markets are closed. So on Monday, February 17th, I'll be eligible to purchase any type of Barnes & Noble stocks, ETFs, or options contracts. I say give it a couple more days. That's just me, but you guys can do whatever you want. So once this date happens right here, if I do not buy any Barnes & Noble contracts or stocks, I will be able to use the $490 total of capital loss in 2026. So this will help me for this year, 2025. So if you're with me, let's say if I make $10,000, I can claim $409 of tax loss because I avoided the wash sale rule. So if y'all want to check this article out, it's right here on Investopedia. It's really simple, straight to the point. There's an example over here for those of y'all that didn't quite get what I was explaining, but I felt like I made it as simple as possible. I feel like a kid in elementary school can understand what I'm saying, but here's just some extra bulletproof evidence that, yes, these tax laws apply to all people, not just the rich and the wealthy. In order to become wealthy or rich, better yet both, you have to know your tax laws. So if you're trading, like me, I do options trading, I day trade, I swing trade. I also have stocks that I swing trade the whole long term. You have to know your tax laws. So with all that being said, stay in tune for episode 4. That's going to be very, very similar. Like I said, episode 4 will be coming soon, and that's going to be on tax loss harvesting. Until next time, this is your boy, Trading G's with G. I'm out.